It's Bob Anderson, and I was going to do a video today about my trading journey and a setback, i.e. a lesson that I learned today. I didn't learn it today, I learned it last week. But I've been getting messages and messages and messages between last week, this week, especially today, regarding successes that people are having on the continuation trade. And to be honest with you, that trade was probably my number one video that people have watched. Not that that matters to me, but what matters to me is that people learn this trade, the way this trade is meant to be traded, because it is the trade. Like I said when I talked about this trade, it is the trade that if I could take it and stick it in my pocket and have nothing else for the rest of my life, it's the one that I would take of all these trades. It's the one, forget the 5-minute gold line trade, forget the 1-minute gold line trade, forget the overnight open trade, forget all those. If there was one trade that I needed to count on to make me money consistently and put money in my pocket, it would be the continuation trade. So I'm going to go over this trade again today in detail. One of the things, this is an example, and I'm just going to read this because this one came to me just a couple hours ago. This is an example of the messages I've been getting in my emails, I've been getting on YouTube, whatnot. And it says, man, this is a game changer. Worked 3 times before the open and worked 3 times after the open. Years I've never put something like this together. I think of all the ways I've overcomplicated trading. All the books that I've read, all the charts that I've studied. Yikes, where do I send you a case of beer, or more likely a case of Woodford Reserve? The reason I read this message, right now is because that's not a newbie trader. He clearly states in there years that he has read books and all that kind of stuff. And I can tell you from the GAM wave and all that kind of stuff, I mean, all that stuff is cool. It makes for good books. But at the end of the day, if you got to write a book that's 300 pages, it's probably too complicated for Bob Anderson. I can tell you that. And so this is my book right here on the continuation trade. Right here's the book. And I'm going to put this in the description down below this video also. So I'm going to put exactly this, and I'm going to put exactly my chart settings below this video so that you don't have to message me and ask me this. You can just say, you can go down in below the video and read it. Now you can message me your successes and stuff. That's all great. We have people that have been watching these videos that are now using funded accounts with Apex, Lilu, whatever. Matter of fact, Lilu contacted me and asked me to be a promoter of their prop firm. Also, Apex has too. I'm not promoting any of these prop firms, to be honest with you. I'm going to give you my independent view. Now, I did go look at the Lilu stuff. One thing I really did like about the Lilu is it reminded me of Apex. They're not covered with rules. They do the same kind of trailing stop stuff that Apex does. And they have many different programs. They have this one thing called a quick eval or something like that. I don't know. For $77, I think it's 12 contracts or something. The problem is you only have 10 trading days to hit $6,000. My strategy really isn't set up for one account to hit $6,000 in 10 trading days. So I'm not that interested in that, to be honest with you. But anyways, so let's talk about the continuation trade, because that's what I'm here to do this video about. So, continuation trade. First and foremost, okay, you must be on the correct side of the red SMA on the 5-minute chart. So you must be trading in the direction. So if price on your 5-minute chart is north of the red line, then you're looking for longs only. If it's south of the red line, you're looking for shorts only. That's rule number one, period. So it's real simple if you really think about it. If you look over at the 5-minute chart like it is right now, and it's north of the red line, you've just eliminated half the damn trades because you're only looking for longs now. Pivot high or low before you pull back to the gold line on the 1-minute chart. So you must have that thrust through, like on a long, you must have that thrust through a previous pivot to your left before you have a pullback to your gold line. You must have a thrust through to your pivot to the left. That's what the swing indicator there is trying to help you visualize. You must have that before you pull back to the gold line, because that clears the area to go farther north. Or on the shorts, same thing. You must break the pivots to your left on the downside before the pullback to your gold line area, or you don't have a trade because you're still in consolidation then. You haven't broken out of the area. So next you must have smooth pullback on the 1-minute candles. I am going to show you 3 beautiful examples of that today that put $762.50 in my account on one contract. Break of the top or bottom after the 1-minute gold line pullback to the entry. So that's where you have that formation, like on a long, when you have the pullback, you have that formation of the top of a candle, and you're gonna drag your entry, your buy stop, to the top of that, to one tick above the lowest candle, the lowest top of a candle for the break to the long side. Same thing on the short. Again, I will show you 3 absolutely beautiful, perfect examples of that today. 5-tick stop loss, 5-point target. Today's markets, ever since we've gotten out of the dulls of August, I've pushed my targets back out to 5 points instead of 3 points on the continuation trade. Today, all 3 trades blew through that 5 points. I mean, you really could have gotten more. I've had people ask me, why do you use 5 points? Because I find on average, that's the optimal place when the traders start rolling out and the pullback starts coming back at you. Is right about 5 points and when the market's running normal. Anyways, break even is at 6 ticks to the positive. Anyways, so I'm going to put these underneath this video. I'm also going to put all the settings from my indicator on the bottom of this video too. And the thing to understand what this guy's trying to talk about here, for example, this experienced trader, is that sounds like he's gone through all the same bullshit I did. All these oscillators and all this GAM stuff and all this wave motion and here's where the market's trying to move it to, because this is where they've had a consolidation of price and all. Listen, I have people message me all the time that say, Bob, have you thought about trying to do this? Why would I think about doing anything else? I defy you to find any trade out there as simple as the one I'm going to show you today, that spits out 5 points on the ES with no heat over and over and over again. And not only spits it out in 1 to 3 minutes. I defy you to find any trade that does. I really do. If you do find one that does it like that, that's when you need to say, hey, Bob, you ought to check this out. If it's one of these, well, you get in here because then they're going to be doing this, and then I don't want to hear about it. I really don't care. I'm not trying to be brash and brusque, but I don't have time. I'm a busy person. I have a business that I run. I do 4 million plus in business a year, and I am the sole salesperson in my organization. So I got stuff to do. But anyways, so let's talk about my 1 minute. Let's go on my 1 minute chart, because that's what the continuation trade is based off of, is the 1 minute chart. And let's get this video going. I could talk all day about this trade because this trade changed my trading too. Okay. It afforded me the opportunity to ultimately figure out the overnight open trade, to ultimately figure out the 5 minute gold line trade. This trade here afforded me the opportunity to see those things. Anyways, here we go. So, by the way, for those of you that only have one chart, see, here's my 5 minute chart, and here's my 1 minute chart. For those of you that do not have the ability to have two charts, because you only have one, let me teach you a little trick. By the way, a subscriber taught this to me. All right. I mean, because, hey, and you guys give me a lot of insight on things all the time. Really, you do. This subscriber taught me this. See this purple line I put on here? I only did this for right now. I will delete it after this video, but this purple line is an SMA set to, let me see here. Where's the indicators? Indicators. Right here. It's an SMA set to 105 periods. Where does 105 come from? Well, if you remember, the red line EMA on both this chart and my 5 minute chart are set to 21 periods. Well, the 5 minute chart is really 105 minutes because it looks back 21 periods. So if you take this chart right here, your 1 minute chart, and you create a 105 minute SMA, it duplicates your red line on your 5 minute chart right here. This is actually the same. It's a little bit of smoothing difference at the point of where it is right now, but it lays out the same. So that is your red line on your 5 minute. I do that so I can make this simple. So anyways, we had price action all north of the red line from the 5 minute over here in the morning, blah, blah, blah. You guys may remember earlier I did a live on my beautiful gold line 5 minute trade right here. Wham, 13 points. I took 5. So let's just be honest. I took 5. Anyway, so then the market opens at 9:30 right here. Let's get over here. 9:30 the market opens, and it does about 15 minutes of BS. As I always talk about, I stay out of the market the first 15 minutes or so. Okay? Then we had a break. Now remember, this purple line right here is your 5 minute red line on your 5 minute chart. Okay? Price gets below it. Okay? So here's your pivot right here. See these gold dots? Here's your pivot that thrusted through it. Now let's open this up as much as I can. And I'm probably going to have to delete these so I can see better. All right, so you had a thrust down, you had a candle bottom, new candle, higher, a high. Notice this candle here stayed the same as this. Of course, this could have been your lead candle down too also. If it had broke down, no big deal. Most important is the candles to the right of it. That this candle here does not break the bottom of this candle here. This is what I call this is what I mean by a smooth pullback of the 1 minute candles. This is the smooth pullback of the 1 minute candles. So you had this one that didn't go lower than this one. You had this one that didn't go lower than this one. Again, now when this one hit your red line here, this is where you would have had your sell stop right at the bottom of that candle there. But then this candle opened and went up even further. So your new entry, because this candle's low, this candle has a higher bottom, is right here, one tick under. So the bottom of this one was at 37.62.75. So your entry is 37.62.50 at exactly 9:45. That's where you would have had your buys, your sell stop. This candle opened right here, bam, 5 points. And just like that, 5 points. 5 points. You only need one of those to pass these evaluations with one contract. To pass the $3,000 evaluation with Apex, for example, you only need that. That's it. There's your one trade. You're done if you wanted. Now, remember, we talk about waves of 3. I say the first trade works better than the second. Okay, where do we get this from? This is the crossover of the red line. Remember, this is your red line on your 5 minute. I could show you on the 5 minute chart, but I'd keep dragging you back and forth. This is your 5 minute red line. This is your first cross of that red line and your pullback and your rotation. Now, why do I always say when you first cross over the red lines, one way or the other, why is it so important to be in that first and or second trade? Because right here, I'm going to tell you what's going on. They're giving, for the people that are still long in the market, they're giving them hope. And then right here, they're crushing their dreams. Okay? They're giving them hope. Oh my God, I might get my money back. And then crush their dreams. It's those crossovers. When it first crosses over the red line to the long, you see the same price action. Because the shorts are like still holding on, and then they pull back and give them that false hope that short is still going to work, and then they crush their dreams. Remember, these are professional thieves at stealing money. Okay, well, let's go to the second one. So remember, this is the first one that tends to work better than the second. By the way, the second one actually worked better than the first one for more points, but not as fast. Remember, this is a 1 minute candle, folks. This is 5 points in less than 1 minute. It actually ended up being 55, 62. It ended up being 7.5 points from your entry. It actually was higher than that, but 7.5 points in 1 minute. In 1 minute. Okay, so here, let's go to the second one. Again, here's your this broke your pivot. Here's your new pivot low right here. Okay, got to visualize this. Rhythmic. This broke the pivot low here to your left. I know it doesn't have the dots, but this is you got to. The dots don't always place in where you want them. Anyway, so here you are, and then here's your high. Here's your low that's higher than this low. 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 Now, at this point in time, you're dragging your sell stop up to here. Okay, you're one tick below this candle here. Well, what happens? It opens and goes even further up. Oh, crap. Okay, so once this candle closes, remember your timer. You got your timer down here, so you're watching your timer. When this goes to 0, you're taking, and you're boom right there. That's your new. So now your new entry, which is just amazing, but it's 37.62. Remember, it was 37.62 and a half over here. So all this price action happened, and there's only 2 ticks apart from the entries. This is why you take your 5 points, get the hell out. Because bam, now you're up here at 37.62, another 5 points. Bam. Now you broke this pivot here. See this? This is like steps. This is like stair steps. Okay? Now you broke this pivot here to your left. Okay? You broke this pivot here to your left. Come down, go back up into your gold again. The bottom of this candle is here. The bottom of this candle is actually higher than the bottom of this candle by 1 tick. And the bottom of this candle is higher than the bottom of this candle, again, because you're pullback. So it's a smooth pullback. The candles are actually smooth. And then here's your sell stop. You got it dragging right up here at 37.54.25. And so let's just say you did that. Now remember, I don't take the third trades. We've talked about this. I'm not a third trade taker. So this is not a trade that I'm looking to take. But it's at 37.54.25 is your entry. So 5 points on that is 37.49.25. 49.50, 49.25. That's exactly where it touched. So ironically, it touched 5 points. Probably wouldn't have gotten filled. Anyways, this is all from 9:45 to not. This entry was at 9:52. This entry was at 9:58. So you can go back and look at your charts and see those. You learn how to do this. Maybe try this. I'm not a big fan of this one. But you learn how to do the first one that crosses over that red line and the second one that crosses over that red line, and you will be a profitable trader. And you too will be sitting there saying to me, holy shit, Bob. Yeah, I know. Those are 5 point plus trades with no heat. You're not just blindly entering for no reason. So, and to me, that's the most important part. So you're not having to take the trade and go, oh, please go my way, please go my way, please go, because the damn thing's already gone your way before you can even blink. Now it's just a matter of, is it going to have the follow through to get to your target? I can't tell you enough how you need to, if you're getting into trading, or if you are a seasoned trader, that you look at this. There's no overbought, oversold symbols on my chart. There's none of that bullshit. You're not having to look at anything other than price action in relationship to your moving averages. That's it. It's that simple. Anyways, I will still do my video. Probably I'll send it out maybe tomorrow on my on my trading education. How about I call it that? My recent trading education. Anyways, everybody have a good day. Good luck. And like I said, all the information of what these moving averages are on these charts, the SMAs, what my indicators are, and these steps will be written at the bottom of this video. Everybody have a good day. Talk to you later. Bye.